So Jeff Bezos wakes up this morning, opens his phone, and finds out Ben Affleck's AI startup just sold to Netflix.
I mean, if you had a first look deal with Amazon and quietly built a side project for a direct competitor,
Bold strategy.
legendary strategy, possibly insane strategy.
Meanwhile, Nuveen is out here dropping $13.5 billion on Schroders, and nobody's talking about it.
Because Affleck,
Because Affleck. We've got mRNA consolidation, a shipping mega deal, Nestlé quietly eating a loss on artisanal coffee. It's a lot.
it's a great day to read footnotes.
It's always a great day to read footnotes. The rundown.
Okay, so BioNTech just ate CureVac, and I feel like nobody's talking about it enough.
They really aren't. This is the end of CureVac as an independent company. mRNA rival, public company, gone. Absorbed into BioNTech stock. And look, that exchange ratio better be generous because CureVac shareholders have had a rough few years.
The mRNA space just keeps consolidating. BioNTech's not done either. I'd bet on it.
Moving on, Netflix acquires InterPositive, Ben Affleck's AI film startup.
Ben Affleck, AI, Netflix, that sentence has no business working, and yet here we are.
Undisclosed price, which, come on, that's doing a lot of heavy lifting.
Okay, but here's the thing. Affleck has a first look deal with Amazon Studios active right now.
Oh, I know.
So Jeff Bezos is somewhere watching his guy's side project land directly in Reed Hastings' house, and
I would pay good money to read that email thread.
this is a PR play dressed as a tech acquisition, and I will die on that hill.
I actually don't disagree, which is rare, so mark your calendars.
Hapag-Lloyd buying Zim for $4.2 billion. Container shipping, big move.
Genuinely significant. Zim's Israeli, Hapag-Lloyd's German, and this creates a much heavier player in global container capacity, right when freight rates are doing interesting things again.
Old school deal. No AI angle, just ships.
Refreshing, honestly. Then there's Centurium Capital, the Luckin Coffee people, in advanced talks to buy Nestlé's Blue Bottle Coffee store network for less than $400 million.
Nestlé paid $500 million for that stake in 2017.
Yep.
So they're eating a meaningful loss on their artisanal coffee era.
The footnote writes itself. And finally, Mirai Asset picks up a 92% stake in Korean crypto exchange Corbett for $92 million.
92% for $92 million. That's either a coincidence or the cleanest pitch deck slide I've ever heard of.
The big one though, Nuveen, Schroders, $13.5 billion, all cash. That's what we're getting into next. The big one, $13.5 billion, all cash. Nuveen just wrote a check for Schroders, and honestly, I'm still processing it.
It's the deal that makes every mid-sized asset manager look in the mirror and go, okay, how long do we have?
Because consolidation pressure in this industry has been building for years, and everyone kept saying it, but this actually confirms it. This is real.
The math is brutal for the smaller players. Fee compression, passive eating everyone's lunch, clients demanding scale and global reach. At some point, you either buy or you get bought.
And Schroders is not a small shop. This is a 100-and-something-year-old London institution. They're managing north of $900 billion in assets.
Which makes the price actually pretty interesting. $13.5 for that AUM base. You start doing the math on basis points and it starts to look almost reasonable.
I'd push back on that a little. The AUM number sounds great until you dig into the mix. A big chunk of that is lower margin institutional mandates. You're not buying $13.5 worth of high fee alternatives.
Fair, but Nuveen is getting distribution. Schroders has a European client footprint that Nuveen has been chasing for years and couldn't build organically fast enough.
That I buy. Geographic arbitrage. TIAA's backing Nuveen. They want global reach. And acquiring it is faster than building it.
Exactly, and cheaper than the last 3 strategic partnerships that went nowhere.
So who loses here?
Honestly, the Schroders employees who thought the independence was permanent. Culture fit between a US institutional giant and a very British, very legacy asset manager is going to be a project.
There's also the FCA angle. Schroders is domiciled in London, heavily regulated, significant retail exposure in the UK. This doesn't just sail through.
The regulators are going to have opinions, loud ones.
And shareholder votes on both sides. All cash means Schroders holders get a clean exit, which removes one complication, but the scrutiny timeline on something this size could stretch into late 2026 easily.
My hot take, and I know this sounds like banker brain, I'm aware, is that this deal gets done and it triggers at least 2 more in the next 18 months. Someone's calling their advisors right now.
I almost agree with you. I want to see what the FCA says first before I go that far.
Growth coming from a skeptic. I'll take it.
Don't get used to it. Speaking of deals where the price deserves some serious side-eye. Nestlé and Blue Bottle. Voices. Okay, so we don't have live analyst quotes on some of these today, which honestly might be a gift because it means we just get to say what we actually think.
Truly the best outcome.
But on the Netflix InterPositive deal, the consensus framing out there is that this is as much a PR play as a technology play. That Netflix isn't really buying IP. They're buying a headline.
And I think that framing is lazy.
Really?
Really, look, yes, Ben Affleck is attached. Yes, it's a good story. But Netflix has been quietly building out AI content tooling for 2 years. This fits a pattern. You don't spend money on a pattern just for press.
The deal size is undisclosed, Nate. Undisclosed. If the IP was genuinely transformative, they'd be shouting a number.
Or they didn't want to tip off the competition on what they valued it at.
That's very charitable.
I contain multitudes.
Also, and I cannot let this go, Ben Affleck has a first-look deal with Amazon Studios. Jeff Bezos just watched his talent's side project walk across the street to Reed Hastings' house.
Oh, that is a deeply awkward dinner party.
The most expensive awkward dinner party.
Now in Blue Bottle, the commentary there is drawing direct lines to Centurium's Luckin Coffee bet. The idea being these guys have a nose for value that Western investors keep missing.
That comparison is earned. Luckin was a disaster by any Western read and Centurium still made money. So if they're buying Blue Bottle stores for under $400 million when Nestlé paid $500 for a majority stake in 2017,
Nestlé is taking a humbling markdown on their artisanal coffee dreams.
a very expensive flat white.
Speaking of expensive, tomorrow we're watching the Nuveen Schroders regulatory picture closely. The FCA has opinions. Spill the tea.
Okay, so Nestlé, $500 million for Blue Bottle coffee. Very premium, very artisanal, very not working out.
They are quietly trying to unload the stores for less than $400 million. That is a $100 million haircut on vibes.
On vibes, on the idea that Swiss food executives could crack the third wave coffee code.
To be fair, Blue Bottle is genuinely good coffee.
Nate, it's very good coffee. It's not $500 million good.
No, it is not. And now Centurium Capital swoops in, which, these are the Luckin Coffee people?
Which is a whole other saga.
Right, they bought into Luckin after the accounting fraud cratered the stock, made an absolute fortune, and now they're looking at Blue Bottle like, we see something here that you Western guys missed.
I actually think that's smart. Centurium knows the Asian market for premium coffee better than Nestlé ever did. If they're keeping the store network and dropping the brand into China.
Okay, hold on, you're buying this?
I'm saying the logic isn't crazy. I'm not saying it works.
That's the most optimistic I've heard you about anything since the Figma deal fell apart and you were briefly happy.
I celebrated for 12 minutes, and I stand by it.
And then there's the Ben Affleck situation, which,
Netflix buying his AI startup.
while he has a first look deal with Amazon Studios, Jeff Bezos is somewhere reading this headline and just closing his laptop very slowly.
City, the deal says AI film tools. The subtext says we paid for the press release.
Speaking of press releases, the Nuveen Schroders $13.5 billion deal deserves its own deep read. And that's exactly where we're headed next. Tomorrow's radar.
Okay, tomorrow's radar, and there's actually a lot to watch.
Nuveen Schroders is the big one. Any FCA commentary out of London could move this fast. Schroders has serious UK regulatory exposure, and $13.5 billion tends to attract attention.
I'll be monitoring that closely. But honestly, I'm more impatient about Blue Bottle.
The Centurium deal.
Advanced talks, formal announcement any day. And look, Nestlé paid $500 million for that stake in 2017, and they're getting out for under $400 million. That's a nine-figure humbling for a Swiss food giant's artisanal dreams.
Centurium spotted value in Luckin when everyone laughed. If they're right on Blue Bottle too, that's a pattern.
Or they're just very good at catching falling knives before they hit the floor.
That's fair.
Also, watch Sotera Health's secondary offering. Warburg Pincus and GTCR sell-down pricing should be out. That's the kind of footnote that tells you everything about exit appetite right now.